heavyweights as well. Well, let me now welcome on board Sanjay Jain, Group Chief Executive Officer at PDS. Sanjay, hi, morning. Good to have you on the show. How is it that you're seeing the India-US trade deal changing India's competitiveness, Sanjay, versus peers like Bangladesh or Vietnam, especially in the key apparel categories where you have a very strong exposure?
Hi, good morning. I think it's a very, very welcome development and which is going to have a significant beneficial impact on India's exports. And to put this in perspective, in 24-25, India exported about $38 billion of apparel and textile, and US was about 30% of that. Last 1 year, because of tariffs largely, there has been a 30% decline. But even at current position, we are less than 10% of total import that US is doing. US imports about $100 billion, and we are just exporting close to $9-10 billion. So there is a lot of share that we can enhance. And at the present juncture, we're just behind China and Vietnam. India is the third largest exporting nation into US on apparel and textile. And our duty at present at 18% is lower than China, is lower than Vietnam as well. In fact, Vietnam is just about 20% and we are close to about 18% or so. So therefore, this fiscal initiative is tremendously going to benefit. But I think it's not just about the fact that the duties have come down. What is far more significant and important at this juncture is the initiatives that got reinforced in budget, whether it is the integrated textile program in terms of fiber availability, in terms of supply chain efficiency, whether it is cluster improvement, textile parks, the eco initiatives, and very importantly, skill development. So therefore, if India was lagging behind on infrastructure, if India was lagging behind on labor productivity, if India was lagging behind on the availability of man-made fiber, all these structural initiatives are very well taking a good shape in India. So I think the combination of the duty cut and the structural initiatives, I feel very positive on the export potential of the apparel and textile segment from India.
Sanjay, hi, this is Harsh here. Does anything change for you in terms of supply chain given this deal and the contours of it? I know you have facilities in Bangladesh, you have facilities in India. You've currently been doing Bangladesh, US. Does anything change for you?
See, PDS has built in a global footprint of sourcing. We've also been, developing Egypt and Latin America when it comes to supplying into US. So therefore, to that extent, we are having a well-balanced approach for catering to US market. On India, as I just mentioned, given the fact that the duty has come down, and from a retailer perspective in US, they won't, look at just one country for sourcing everything. They will do a balancing act across the globe, keeping in mind the geopolitical situation, keeping in mind the duty structure, and keeping in mind the lead time it takes. For example, when you talk about supply chain, keeping in mind the lead time it takes for getting into US. And that's where, when they want shorter cycle product, they look at Latin America or Egypt or Turkey. But when they're looking at value segment, when they're looking at continued supply, wherein the cost is equally important as well, then I think India would become equally important now.
The thing I wanted to talk about also was, in your last con call, Sanjay, I recall you mentioning that USA business will achieve revenue of about 2,500 crore rupees by end of FY26. Tell me now, with the deal getting sealed, does that number change at all? And what is the future projection like?
So, US has been a focus area last couple of years for us. Today, it accounts for closer to 20% of our total top line, which is almost about $1.5 billion US. And I think US also been growing very fast in our portfolio. And yes, this one initiative is surely going to be a catalyst in that direction. I think the acquisition of Knit Gallery Factory about 1 year back reinforces PDS capability to understand Indian manufacturing and therefore serve the US customers much more. So we won't revise any numbers at this juncture, but I think we surely feel very positive in our ability to get a larger share of US customer by selling in more from US. I think it's a very, very welcome initiative, and PDS through its sourcing offices and through the ownership of Knit Gallery is very well placed to make the most of it.
And Sanjay, with regard to India EU as well, does both of these deals coming back to back, does it in any way convince you to hike your guidance in terms of revenue growth, in terms of the kind of potential of PDS?
See, these initiatives don't lead to an immediate result in 3 months, 6 months time frame. These initiatives always unfold into medium and long term. And before I specifically answer your point on guidance, I think, as I said in response to the first point, US is about 30% of India's export. The duty is down to 18%, one of the lowest. EU is about 20% of India's exports, and there is an FTA now. UK is about 5% of India's export, and there is FTA now. So almost at 55% of the exports, there is either a very low duty or there is an FTA in place now. So I think there is surely going to be a significantly positive impact, but I guess it take a couple of quarters for it to start unfolding into being visible in our results. So I think you should give us 1 or 2 more quarters to take this into our stride. And we surely, as we come back sometime in May, having finished the financials for 25-26, we should be in a better position to say as to how much we will benefit in the coming year.
Absolutely. Right, Sanjay. Great to have you on the show. And congratulations once again. Must be a big relief, I'm guessing. We'll take a very quick break.